Hello everyone, this is Juan Sarmiento and today is Friday, November the 5th. Okay, I have a number of potential trades here that I have considered and I'm going to display them to you. Juniper, NXPY, Qualcomm, SPG, and STX. That's a bunch, but I'm actually quite reserved about trading them. Let's start with Juniper here. And you can see that I have no trading here and no trading here. Liquidity and volatility skew. Okay, let's go to the trade itself in the Analyze tab, Juniper. And here's the trade. And you can see the volatility here is a little low compared to the rest. That's the short call for December. Let's unlock it here. This could change with the trading day, so let me check, make sure that the numbers are correct, about right. Changing just a bit, 24 and 27 and 24.12. So yeah, it is a little, the skew is not quite right, but by very little. Okay, then we have the liquidity here. So we say create duplicate, and that gives us the mid and the natural, and we can enter it here, 7.45 versus 9.3. Yeah, that's a do not trade, obviously. The liquidity is fairly low. Okay, so this is borderline, and this is definitely a no. Otherwise, look at the difference between the expected and the not expected, and the actual, and the actual result is quite different. So that's quite encouraging and motivates me to do the trade. Okay, let's look at it again. Yeah, I'm very tempted to do it. The volatility is very, very low compared to the rest of the year, as you can see. Okay, it's at the lower end. So let's make the trade. Okay, it's not exactly right, but it would do. Okay, unlock it and say create duplicate, and then I say confirm and send. But in this case, I said here I said multiple accounts. My account here is number 15, 615, and you can see that my buying power effect is 700, and we can make as much as 10% of our account, which is at $87,000, 88. So we can do it $8,000. So we go increasing here until we get to 8,000. Yeah, that seems to be a little under 10%, so let's send that off, okay? And let's wait until it gets filled. In the meantime, let's move on to the next one, XPY. Okay, in this case, we have very big beat in the earnings front. That's very motivating. The volatility is low here. Liquidity is not so liquid, but then this might have to do with the pre-market. Okay, if one of these gets better, then we can trade, otherwise we will pass. Now let's go to an XPY. And you can see here that we have 61. Okay, so 210 is now trading at 220. So we could go to 220. Change all those. Okay, excellent. So let's go to the number here, XPY. The cost, yeah, we could do one only. Here's the expected versus actual. That's a big beat. As I said, let's change this. 32.80, 32.80, 34.32, 31.16, 34.98. I'm copying here from the bottom right corner of your screen, so that's 1.54, that's less than 3%. Okay, now the liquidity. So when we say create duplicate here, create duplicate, that gives us the mid and the natural, and those are our numbers that we enter here for liquidity. 61.55, oh, just change to 62.2, and 69, that's very wide range, which means it's not liquid enough, so we're going to have a lot of trouble getting in and out. And then the volatility is fairly high here, so we have to, despite the fact that it's moving like gangbusters, we have to avoid it. Okay, let's move on. Qualcomm. Okay, Qualcomm, this is, I entered it before the market, so it might have changed during the market open. Okay, big move here, as you can see, after earnings. Volatility is still high, so let's check that out. Earnings 255, yes, a big earnings beat again. Let's go to the Analyze tab. Okay, and unlock that, and we are right in the middle there. 155, that's good. So then we enter these numbers here at the bottom right corner into our spreadsheet. The volatility for the calls back month, front, and the put back month, and then front month, 34.38 for the calls and 31.93 for the puts. Again, I'm copying here from the bottom right corner of your screen. That's the volatility for each leg of the trade. And it's negative, so that's good. That means it's, we can easily do that. The volatility is very balanced between the bid and the ask, between the back month and the front month. So that's good, but let's see, what about liquidity? Create duplicate, and we have volatility here, 31.03 versus 36.95. Again, not liquid enough. Okay, let's do the volatility. To look at the volatility, go to the trade tab. This is the historical volatility. So it's the IV versus historical is 35. That's way too large. So that's not gonna do either. This could change, and I keep my spreadsheets in case it changes, if I'm motivated enough to. This one was giving me a weird number here, as you can see, very low for the front month call. That's SPG. So I'm gonna go straight for that number to the Analyze tab. Yeah, that changed already. This is SPG. Is Simon Properties Group. Okay, that strikes me as something illiquid, but that could be different. 31.22, 30.09. I'm entering the numbers again from the volatility on the right corner of your screen, right bottom corner. Okay, that's just changed since the opening. So obviously those numbers are not good before the market opens. And the volatility skew is good. Let's look at the liquidity. Liquidity mid versus 39.95 versus 44.3. Yeah, that's a big volatility, liquidity issue. Okay, so we skip that. Well, everything else seems to be okay. So you have to think, well, do I take the chance? Well, with the note that it's going to be difficult to get in and out. Well, that's not necessarily bad, but sometimes it is very troublesome. Okay, so Let's do that just so that you can see that obviously in real life it's going to be much more difficult. So to be fair, I don't want to enter this kind of trade because in real life you may not be able to even get in, and here it would fill in no time. Okay, see, let's just do the one so that you get a sense. Just the one lot, okay? Look at this April. So you see, it looked like it was a piece of cake. Well, in real life, it probably is not. Okay. In fact, I'm going to enter the same trade in my account just to check that out. Okay. And finally, there is STX. That's a more familiar stock, STX, and that's Seagate Technologies. Look at the move. Volatility is low, so let's see the trade here, STX, and again you see the volatilities, the earnings differential is quite big, but the volatility skew, this is before the market opens, so this already changed. So let's trade 30, enter that 35.9083 versus 34.93. I'm copying from here, bottom right corner of your screen, okay? 32.17, 32.13. Okay, so that's very close to 3%. That's quite acceptable, even though it says do not trade. It's very, very close to the 3% cutoff point. The liquidity, uh, 34. Let's see. The price 24.81 versus 26.86. Again, all the liquidity is just not liquid enough. It seems to be the theme of the day. Let's look at the trade volatility. You go to the trade tab and scroll down till you see today's options statistics as current IV percentile 18%. That's not too bad, but it's still not 15%, which is my minimum. Okay, so there are too many do not trades here, so I'm going to skip it. Okay, we got two trades here. The Juniper has not filled out yet. The price keeps going up, so I'm going to adjust it right now. Cancel, replace, unlock it, lock it again, and confirm and send. Okay, it might get filled, it might not. Okay. So I don't guarantee that it will be filled because it's just not liquid enough. This seems to be the problem of the day. Okay, let's look at the trades here to see which needs to be rolled over. Starting with Apple. Look at the chart. Apple is near its high. Let's go to the Analyze tab. Here we have November expiration, November 19. If you say add simulated trades, you see that's 14 days from now. So if it was 7 days from now, then I would do that rollover or close the trade. 14 is okay. You might want to adjust the puts here. Okay, it's bullish right now. I could move this put up. You see how I rolled it down to 145, and now the stock has moved up. And now at the top here, I could bring it back. So let's go to the monitor tab, account statement, and see what I had done in the past several days ago. And say, okay, Apple, and we're gonna see the orders here. And you can see how I did the roll down. Here's my roll down from 55 puts to 45 puts. So I got a credit of $6.35. How much if I were to reverse that? Okay, analyze opposite again. I would have to pay, instead of $6.35 in credit, I would pay only $4.55. So then right there, that's a profit. By doing the roll down and then waiting until it pulls up, I got a little money. And then by buying it back, then I neutralize my delta. Right now, the delta is too positive at 38, I think. It seems like Apple is sort of topping out here. It might break out to a new high, but in either case, it doesn't matter to me. If I do this, bring it back, then it's more neutral. Okay, so I'm going to essentially neutralize my delta by reverting to the original position that was 2 puts at 155. Right now we have one put at 155, another at 145. So we restore that 145 to 155 by buying it back. We have sold it for $6 and some odd cents, and I'm buying it back for $4 and some odd cents. Okay, and I let it be. Let's go to ABT rather. Let's go to the Analyze tab. Okay, here is a very flat. Remember, this is a Abbott Pharmaceuticals. That's a low volatility stock. You can see it's 21. We have not gotten a big spike in volatility, but oh, look, it's beginning to rise. And that's why we have a little bit of a profit here, because the stock has increased its volatility, even though the stock price has not changed much since we entered, but the volatility increase gives us a little profit, okay? But we have November expiration, November 19th, that's 14 days from now. Let's move on to COP. And this is what we have, and we have neutralized our deltas. Now it's at 21. And what we did was we sold 2 calls, and that's how we neutralized our deltas. Let's take a look at the chart. Yeah, and it's been going down a little. And we restored that Apple trade, as you can see. Okay, let's see, what do I do? I think I'm gonna leave it the way it is. This COP is delta neutral, and I don't care whether it moves strongly down or strongly higher. It seems like to me that it's need to correct, and I always look at the Ichimoku cloud as my target. Okay, not necessarily right, but that's what I'm thinking. Okay, okay. Let's look at CRM reaching new high, fresh new high. So let's look at the trade. Okay, we already sold, moved up the one call from 277 to 130, this one here, okay, 130 to 300 rather, and it's now reaching 310. So we could actually neutralize our deltas by raising that up again. Analyze rolling, and just take it to 310, and same expiration, which is January. Okay, so that gives us a credit of $535 by doing that. And our deltas become neutralized. Do I want to do that? Let's take a quick look at the chart. Yeah, because it's way at the top, okay? So what if it begins to go down? And we have a week to wait for that, and it could, and before we see the account again, and it could happen, and then we are surprised. The stock end up somewhere lower. Particularly if you can do this, if you are expecting the stock to report earnings, to neutralize your deltas is a good idea. And that's a way to take profits and reduce your cash overlay. Okay, so there is the trade. I enter it. We'll see if it fills. Juniper still not filling. Let's take a look at the monitor tab again. Do I want to? Well, look at the price. It's $6.99 and I'm offering $7.55. That's what happens when you have low liquidity. You seem to be paying more than you should. Okay, let's look at the create duplicate trade, and that look at my mid versus natural. I'm in this area, and I could be paying this. Well, right there. So we wait a little longer. CRM is precisely at the strike price. So let's move on to Lowe's. Lowe's is reaching all-time highs as well. So we could adjust if we need to. Our deltas are 118, and you can see that I already did a roll up to 230, and it's now 240. But look at how many outstanding calls we have. What do I mean by that? How many calls you have long? 2 here, 1 here, 2 short. They neutralize each other. So I only have the 1 call, but I can roll it up again, couldn't I? Yes, I can. Analyze it's rolling. You can roll it up as many times as you feel comfortable with. And let's take that to 240. That was the CRM trade. Okay, that's 240. And make sure it's the same strike price, the same expiration, and that gives us $552 and neutralizes our delta to nearly zero, 4.71. We always wanted a little positive in case the stock goes up with reducing in volatility. So let's send that off, that rollover, and the expiration of the shorts is on the 26th, and that is 2 weeks from now. No, 3 weeks on the 26th. Okay, that just filled right away. The low, let's take a look at the chart again. Excuse me. And you can see the delta is 5. That's great. Okay, so that's a way to take profits. As the stock moves up, you collect your money back, so to speak. Some of it will be profit, some of it will be just trying to break even. But you still have this situation in which a big move in either direction could benefit you. And you know, we come here a week from now, and it may have moved 200 points in either direction, and bingo, we make a big deal of money. Not always happens, but it has been known to occur. Okay, let's put it that way. And we're setting ourselves to let it happen. Okay, this is Oracle, and this is what it looks like right now. We have theta profits. This stock is very close at the entry point, and we have accumulated $227 in profits. The stock is expiring. The options, short options, are expiring next week, so we can make the move. And how are we going to make the move? We're going to roll them all over, both the calls and the puts, because we are so close to the strike price. And what happens with that? Well, it looks more like a straddle now, and my deltas are more neutral. My Vega spikes a little bit, and my theta, it becomes negative. Okay, all right, so let's do that. And of course, this is a week from now, so we are making this move now. SPG is the trade that I just entered, and I said that it's illiquid, but it got filled right away. But then again, this is a paper trading account. TER is a trade we entered last week, and it's doing well, $730. So why is that? Well, look at the move and look at the volatility going up a little bit. That's ideal. If the stock was to go up with increased volatility, it happens rarely though, but when it does, it gives me great profits in very short order, and that's $700. Let's go to UPS. UPS expires in December. The short expired on December the 3rd. Plenty of time to see that happen, so no change right now. And then we have WFC, that's Wells Fargo. And this is my trade right now. Ooh, big profits. Let's take a look at the chart. Yeah, the volatility's gone up from when we entered the trade here at 0.29, and it's now 0.3. Doesn't have to increase much in volatility to give me profits, it seems, but when it does go up, it could be very, very good. If the stock collapses, if the market collapses, volatility spikes so high, we make big profits. So that's what we are hoping for one day happens. But in the meantime, we're just collecting profits as the stocks go up. Okay, here it is. Wells Fargo, and it's expiring November the 12th, so I'm going to roll it over to December. Doing that makes my trade more bullish. Let's look at the chart. This is sort of neutral. I feel neutral about it. Okay, what we're going to do is neutralize our delta. Delta of 128 seems to be quite a lot. Right now it's negative. I don't want it negative, but I don't want it positive either. So what I'm going to do is I'm going to increase the short calls here. Okay, 1, 2, and that neutralizes my deltas. See, I now increase the number of short December 10th calls in my rollover, and this is perfectly all right. It's unbalanced, but it will get filled, and it gives me more credit, 2,260. So let's do that and hope that it fills. Or you can just, oh, there it is. Yeah, I wouldn't be surprised that it happened that quickly in real life, because Wells Fargo is a well-known company. And as it is, we're now increasing our profits. Let's look at the yearly profits and losses here. Yeah, at some point we have more than $4,000 loss. Now we have reduced that to 2,700. So year to date here it's 31 rather. We have close to 5,000 at some point. So things are getting a little better, and so you never know when it's going to happen. So you just have to keep on trading and trust that in the long run you're going to do great. And today all my positions are on the positive side. Why would that be? Well, because it seems like the market is going up with increasing volatility. Look at those moves, big moves up on the Dow Jones, NASDAQ, and the SPX. The volatility here is already low, and it's unlikely to get much lower than that. So, and some stocks are going up. Let's take a look at NVIDIA, for example. This is a stock that I can't trade in this account, but look at the volatility here as it approaches earnings. The stock has moved up significantly higher, yet the volatility spikes. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.